Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience of SmithWeekly, including Mark R., Brian H., Jared W., and Edward S. On the program today, we have a returning guest back to update. Mr. Luke Alexander is with us. Luke is the president and CEO of Newcore Gold. The company is focused on advancing its Enchi gold project in Ghana, West Africa, which is in its development stages where the company is expanding the gold resource, advancing through economic studies, and is in pre-mine permitting work efforts. Nearby the Enchi deposit remains significant exploration potential that the company is also advancing. Newcore Gold is listed on the Toronto Venture Exchange under the symbol NCAU and also on the US OTC markets under the symbol NCAUF. Mr. Alexander, welcome back to SmithWeekly Discussions.
Yeah, hi Andrew, great to be back.
Yeah, Luke, great to have you back on. And why don't we get right into updates here because there's some good results that have been passing through the company over these last few months. Recent drill results reported during April and May. Of course, you and I chatted back in March, but those April and May results continuing to demonstrate continuity and further resource expansion at Enchi. Talk about those results and, of course, the schedule to complete this current drilling campaign.
Yeah, so in the last couple of months, we have put out a lot of additional drill results. These have been focused on two things. One is resource conversion, so converting ounces from the inferred to the indicated category, which is one of the key elements that's required for us to move from a PEA to a PFS, which we're looking to get out in the first half of next year. And then secondly, we have been also pushing a number of these holes beyond the existing pits that constrain our resource today, as well as stepping out in a number of instances, which will ultimately, in our view, create some resource growth with this drilling that we've been doing. Thus far, for the 35,000 meter drill program that we announced in Q3 of last year and expanded to 35,000 meters in February on the back of the financing, we've completed about 20,000 meters. So we've completed just under 60% of the current drill program. So we've got lots of additional drilling to come throughout the course of this year. Specifically, over the last couple of months since we last spoke, we have been focused in on our Boing deposit, as well as we've been drilling at Nyam and Kogina Hill. Kogina Hill would be a good example of a resource expansion area that we're focused on. This is a target that we put about 5,000 meters into historically. We made some nice discoveries there. We see the potential to grow the overall mineral endowment there and ultimately look to, over time, create enough drill density to be able to wrap our resource around the discoveries that we've made at Kogina Hill. So we put those results out towards the end of April, along with some additional drilling that we've done at our Nyam deposit, which is our third largest deposit on the project. Again, had some nice higher grade intercepts at Nyam. And then in May, we had some very good results come out of drilling at our Boing deposit. So just as a reminder, Boing is our second largest deposit. Early May, we intercepted 2.25 grams over 56 meters from about 96 meters below surface. We also, within that same press release, put out 1.16 over 72 meters. So those are nice, big, wide, above average grade intercepts on our project. And if you look specifically at that hole 352, which is the 2.25 grams over 56 meters, within that 3.8 grams over 15 meters, you'll see that that's the deepest hole on that section. So we're very encouraged by the fact that we've hit these wide zones of mineralization at the deepest part on this section. So we obviously will want to get back in there and continue to chase these wide mineralized zones and the high grade that we're seeing within them. Towards the end of May, we then put some additional results out from Boing. These included 4.4 grams over 24 meters. Within that, we had 9 grams over 10 meters. So very nice high grade intercept at our Boing deposit. And those holes started from about 126 meters below surface. So again, these set of results we put out in May were relatively shallow drilling, which highlights the opportunity for us to continue to chase these structures at depth as well as along strike.
Lots of good results here, and I'm looking forward to seeing the mineral resource updates. Some folks can do a little bit of work here and kind of sort out where this is headed, but it's good, very good, consistent results. To remind the audience, these deposit areas, Luke, give us a proximity here. How far are these apart? Maybe give us a radius of where these are. I know we have obviously more work coming with the pre-feasibility study coming out, but just give the audience a flavor for how close these are together.
So Boing and Cum are our two largest deposits. If you look at the PEA, about 85% of the material that feeds the economics within that heap leach operation come from our Boing and Cum deposit. They sit about 4 kilometers away from each other. Where the heap leach pad sits is centrally located between the two of them. So you're looking at about 1.5 to 2.5 kilometers from each of those deposits. So very nicely located. Niam and Quachikrum, which are our third and fourth largest deposits, they sit slightly to the northeast and are about 6 to 10 kilometers away, again, depending where you are on the deposit. So it's all relatively centrally located, but important to highlight that, again, at Boing, Cum, Niam, Quachikrum, Tokasea, our 5 resource areas and our 5 main deposits, all of those do remain open along strike. So the opportunity for us to continue to systematically step out and add near surface ounces is something we will focus on. But then also the opportunity at depth is something we're really excited about. And these results that we've been putting out over the last couple of months continues to highlight that opportunity. Again, that hole 352 that I highlighted was the deepest one on the section. If you go look at our presentation, you'll see some additional drill holes in there, including 288, 294, 295. These were all deeper holes on the sections, encountering nice higher grade mineralization. And it's important to highlight that when you look at the pits that constrain our current resource today, and if you go through the cross sections that we've put out, or you go through the 3D model that we've got on our website, you'll see that a lot of these holes, we've pushed them well beyond the existing pits and ended in mineralization and intercepted mineralization beyond these existing pits. So we're feeling confident that with that, we're going to be able to expand the overall size of the resource, as well as converting ounces, which is one of our key goals with this initial, call it, first 60% of the drill program. So really killing 2 birds with 1 stone: resource conversion and resource expansion. So we're extremely pleased with the drilling that we've completed thus far on the 35,000 meter program that we've got ongoing at the moment.
For any measure of a project like this, it's very close together, so that's great. The fact that it's open in many directions is fantastic as well. And then, of course, there's that more open, the overall project area discovery work that can continue to be ongoing as well as you guys wrap up the current efforts towards the pre-feasibility study, but then also continue testing of the exploration targets out there on the project. So there's that upside yet to come as well. On the pre-feasibility study work progress, wanted to have you give us an update on how that work is going, how that is progressing along as far as plans for release. It sounds like the drilling program that is ongoing will wrap up maybe in into 3Q or maybe sometime in 4Q, but talk about that pre-feasibility study work.
Yeah, so one of the key elements, which I've kind of alluded to or mentioned a couple times, is we are converting ounces from the inferred to the indicated category. Based on our internal modeling with the initial, call it just under 20,000 meters that we've completed, we have converted the ounces that we're looking to ultimately convert. So the remainder of the program will be focused on more, call it true exploration, resource expansion type drilling. Again, we think we have been able to expand the overall size of the resource through those holes that we're drilling deeper. But, let's put that to one side, and the last 40% will be focused on pure exploration drilling, as well as putting some deeper diamond holes into the project, which I know a number of our investors are excited about. So we're at this stage confident with the conversion drilling that is now completed, and obviously we'll need to get that modeled up and look to wrap an updated indicated and inferred resource around that drilling. And then in terms of additional work from a PFS perspective, we're doing hydrological work. We're doing some geotech work at the moment. We've got a number of columns that we're currently running at our Met lab. We're doing some compactability testing. We're doing some additional environmental and social work as well. So all of that is ongoing, and we'll look to ultimately commission the PFS in the second half of this year and look to get it completed by the first half of next year. The biggest component is the drilling, but all of those other elements that I just referred to, we've been working on that over the last 6 months as well. So we're in a very good position at the moment to obviously meet that timeline that we're looking at, which is commissioning in the second half of this year with publishing the PFS in the first half of next year.
We'll talk just a little bit more on some of these items here in just a moment. With respect to that expansion of the resource, of course, you guys are continuing to have successful drill results, and I suspect that'll continue. I don't see there's no reason why that won't. But also, just talk a little bit about expectations as to what you would prefer to see, or maybe what you could say here. I know that this is coming out pre-feasibility, of course, but just your thoughts on where you see the life of mine going. I know that's open-ended, but where you would see that potentially going, or you have a target in mind for life of mine, and then also maybe how that annual production profile would look to be ending up, just as far as maybe your expectations or what you can say on that front.
Yeah, so one thing I always kind of mention, and the way I look at it to a certain extent, is if you look at the economics that we outlined within the PEA last year, they're very robust economics. I mean, looking at it now at a $3,000 gold price, let's say, you're looking at an after-tax NPV of $970 million, 136% after-tax IRR, 0.7-year payback. And one of the things that obviously really helps drive those economics is the fact that these heap leach projects are relatively low capex compared to a full CIL project. So the economics of this project and what we outlined within the PEA are just tremendous. The after-tax cash flow for the project at a $3,000 gold price is $1.3 billion. If you drop that to a 2350 gold price, you're looking at 855 million of after-tax cash flow. So the cash flow that this project generates is tremendous as well. So what I always mention to people is, if we don't find one more ounce on the project and we wrap a PFS around the PEA and replicate the results that we had within the PEA, the de-risking that comes with that and the multiple re-rate that the market will pay for a PFS stage project relative to a PEA stage project, in my view, will create a lot of value for shareholders. That being said, with the resource expansion, with the results that we're seeing with this drilling, our view is that there will be optimization opportunities that can come with the PFS, but they're not required. So we've got a project today that if we can replicate it within the PFS, creates tremendous economics, cash flow, and will command a much higher multiple from the market. But we do see optimization type opportunities. And I would argue beyond that, you get district scale exploration for free. If you look at, all of the targets that we've got across our project, we've identified over 25 targets to date, of which we've only drilled on 9 of them, and 5 of them make up our resource today. All of our deposits, as I mentioned, remain open along strike, so systematically stepping out and adding near surface ounces. We've identified parallel structures at a number of our deposits, which we're seeing good results coming from. We've got 4 previously drill tested areas that we've made discoveries and will warrant doing additional drilling over time. And then when you look at the average vertical depth of the pits that constrain our resource today, they average roughly 70, 75 meters in depth. When you compare that to mines around the world, or you compare it to Chirano or Bibiani or Newmont's Ahafo mine along the same Sefwi-Bibiani belt to the north of us, you'll see a number of those mines are down to, Chirano, for example, is down at 800 meters below surface. They've drilled down to 1.2 to 1.3 kilometers. So we've really just scratched the surface with the drilling that we've been doing. If you look at our deeper holes, which again, relatively speaking, aren't that deep, they're kind of down, call it 250 to 350 meters. We've only drilled about 45 of those deeper type holes on the project. We've made a number of very nice discoveries, and a couple of them we've talked about here on this program, and those have been recently made, but that will all warrant follow-up drilling. And some of that deeper, higher grade opportunity is something we're going to focus on in the second half of this year with this additional drilling that we've got within this 35,000 meters. So, moving it to a PFS should create a multiple re-rate based on that de-risking work. And then layered on top of that, I would argue you get pure district scale exploration for free. But we don't need that exploration given how robust the economics of the project are today. And that project warrants being put into production as soon as possible.
Absolutely. That's a key point. And cash flows in this market is definitely a driver for the decisions, especially when you have the ability, like you guys do, to potentially be in cash flow in the years ahead. That's a key item. And then, of course, some of those cash flows can be deployed on the district. But very good results here, Luke. This is very good. And I think you guys will continue to gather respect. You already are getting some, and there's more coming for sure. And some very good work progress getting through the PFS and then moving into feasibility and moving down the road is going to be further milestone items to come in 2026 and onward. Just on capital structure, Luke, and we'll come back to a few other items here in a moment. Just want to get a quick update on cap structure and balance sheet for a moment. Where are we sitting with the program progressing? Where are we at on cash? And then also just remind the audience, I think this is important, of the insider ownership of the shares.
Yeah, so in terms of everything we've talked about so far on this interview program, we're fully funded for all of that. So as of the end of Q1, we had about 15 million of cash in the bank. It's important to highlight that we then have an additional 14 million of warrant proceeds that are well in the money and will come in between now and February of 2026. So call it, what's that, 8 months from now. So between now and September, we've got about 3.5 million of warrants that we expect to come in, assuming the market doesn't collapse. Some of that money has already started to trickle in. And then in February of next year, we've got an additional $10.5 million of warrant proceeds coming in. So you add that to our current cash, and that would have us sitting around $30 million. So what I could foresee happening is, 3.5 million comes in between now and September. That would then allow us to expand our drill program beyond the 35,000 meters. And then additional 5-6 months later, an additional 10.5 million comes in. That would allow us to expand our drill program again. as well as look at funding funding a feasibility study, assuming our investors are keen for us to take it from a PFS to an FS at that stage. So we are fully funded, as well as we're funded for meaningful expansion of the drill program, which is something we're very excited about. So from a pure capital structure perspective, we've got about 250 million shares outstanding. Management and board, we own 15% of the company. That stock that we have bought alongside investors over the last number of years. We are 55% institutionally owned. That increased from 45% on the back of the $15 million raise that we did in February. Franklin Templeton is our largest institutional investor, followed by Aegis, Ruffer. We've got Ixios, Merck, Libra, Adrian Day, CQS, SSI on the share register. So we've got a tier one share register, and our investors are keen to see us get this project into cash flow as quickly as possible, because it's rare for them to see projects that have economics that are as strong as this for such a low capex. But they also want to see us continue to aggressively drill on the project, because they do see that true district scale exploration upside. So great institutional shareholder base at the moment. And then from a let's call it market perspective, we've currently got Canaccord, who covers us from a research perspective, as well as SCP. So if anyone are clients of either of those groups, I would encourage you to reach out and get some of the research from those analysts. And then maybe I'll just touch on liquidity, because I'm sure that's something that your listeners are keen on as well. So our current average daily volume is about 500,000 shares a day. If you look at that at, call it 65, 70 cents a share, that's about $350,000, $400,000 worth a day of trading. So good liquidity in the stock as well. So that'd be a kind of high level overview of the cap structure.
Luke, thank you for that. Definitely a good roster to have here, and definitely I think the priorities are set right, and you guys have been delivering on those priorities and that dual focus, essentially the development of this project, but also demonstrating the upside of the project as well, both with resource expansion and then also just that exploration potential beyond that. So I appreciate that information. Good job on the liquidity. It's good to see the stock trading and handling that type of volume on a daily basis. That's good stuff there. Just on some of the environmental work that's happening, maybe some of the infrastructure consideration work, and then also the community work you mentioned earlier. Just any additional things you want to touch on those items.
Yeah, so fundamentally at a high level, our view is that all stakeholders need to benefit in from a project like ours. We are very well intertwined into the local community. Things like installing water wells and bridges, upgrading schools, sanitary facilities. All of those are things that we have done for a number of years. We have been working in this community for a number of years. Our local, ESG staff, they come from the town of Enchi, so are very familiar with the community. So we're pushing the project forward from that perspective. I think at a higher level, let's say at a federal level, I think there's a recognition that our Enchi project is one of the two most advanced gold projects in the country. There's an interesting dynamic in Ghana where you got, Ghana is Africa's largest gold producer. You've got 4 of the top 10 largest gold producers there, including Newmont, Zijin, Anglo, and Goldfields, all with significant operations. You've then got a number of mid-tiers operating in country as well, including Perseus, Shandong, Asante, Galliano. So there's a number of large and mid-cap companies operating in the country. But then below that, there's a real dearth of projects that are at a development stage. And when you look at our Enchi project, we're one of the two most advanced gold projects in the country. So I think the government recognizes the benefit that this project will have for the Western region, which is where our project is located, as well as for Ghana as a whole. It's obviously important for jobs, it's important for taxes, royalties. So all of those things lead to Newcore and our Enchi project having a lot of support from a government perspective. In terms of some of the environmental and social baseline work that we've done, we did complete an updated environmental and social baseline study in 2023. We put together a report in 2024. We are now doing additional work to further advance the environmental and social work on the project, which will then feed into the PFS that we're looking to put out in the first half of next year. So lots of work has gone into this project. And again, our view is that all stakeholders need to benefit with a project like Enchi.
Excited to see what other things you guys do on a community front here going forward as you guys continue to progress through those stages. And of course, the size of the company bulks up and things get closer to more serious activities on site as far as, and then also, of course, cash flow and the things that lead into that ahead of time as well. So great to hear on some of those relations, and definitely a great jurisdiction. You and I have talked many times in the past on this program about the jurisdiction is definitely a good place, mining friendly, understand mining. They understand the wealth creation that comes from natural resource development in a responsible fashion compared to some of those countries out there that whine and complain consistently now, which just don't understand it. Unfortunately, they failed on the education front of their people to understand why mineral endowments work really well for these countries and why you have to develop them. But very good stuff here. I want to just talk briefly because I like to get your comments on these things, Luke. The market, the gold market here, price of gold obviously looking quite good. Cash flows starting to roll in different fashion for some of the mid tiers out there, and of course the majors. And we're seeing the differences in the profiles, the cost profiles of some of these companies, whether you're talking about African producers or producers elsewhere. Lots of differences in all-in sustaining costs being reported. But beyond that, you've got a good price environment. Sentiment out there for the African focused junior developers. I'd like to get your thoughts on that, or just sentiment overall, but just thoughts on gold market and of course the sentiment out there so far.
Yeah, so I think sentiment has definitely improved for the junior sector. I think we're starting to see that reflected in share prices. That being said, I think we're seeing a healthy decoupling in the market where ultimately, good projects that warrant being built, that have good economics, good discoveries, growth potential, those projects are ultimately being rewarded by the market and seeing share prices go up. I still can see a lot of junior companies who maybe have subpar projects that ultimately are years away from development or in challenged environments that are not being, and I think rightly, are not being rewarded from the market. So I think that's a healthy decoupling in the market that we're seeing at the moment. And obviously with our Enchi project, our tremendous institutional support, Newcore is being rewarded for all of the hard work that we've done over the last number of years. I mean, if we look at the last 5 years specifically, since we relaunched the company and I joined as CEO and Greg Smith came back full-time VPX and Mal Carvasca came and joined as VP of Business Development and Investor Relations. I mean, we've drilled 110,000 meters. We've put out 3 resource updates, 2 PEAs. We've significantly de-risked the met work on the project. We've converted ounces from inferred to indicated, so de-risked the ounces that are in the ground. So all of that is, being reflected in the stock price today. And we see another tremendous leg up for the company as we take this to a PFS. So, so I think companies like ours are being rewarded and rightfully so. But I think a lot of companies are still really struggling. And that's ultimately because there hasn't been much work done for investors to get excited about over the last number of years, as well as your classic financing overhang. For us, we're fully funded. We don't need to raise any capital. We can create significant returns for shareholders. But as soon as the market can tell that there's a funding overhang for companies, that always is a challenge for them to re-rate as well. So those are a couple of things I would mention. Obviously, we're seeing the producers and the seniors, their multiples go up meaningfully. And I think we're starting to see a little bit of that waterfall effect from the seniors down to the mid caps and into a select number of junior developer exploration type companies. And then specifically, you were asking about Africa. I mean, I put Ghana into a separate camp from a West African perspective. Obviously, we've got four of the largest gold producers there. We've got a very well-aligned government. So, we're in a very favorable jurisdiction. But, West Africa has had its challenges over the last couple of years. And obviously, there's a few jurisdictions that investors are no longer willing to go to, given some of those challenges that we've seen in those jurisdictions. So, we're in a very favorable position. But I think, like anywhere in the world, if there's instability, then that's going to make investors nervous and ultimately either have them pull their capital out of those countries or just not be willing to invest in those countries.
Yeah, Luke, I agree with that. I think that some of these companies have to be punished. It's been far too long. There's ones that are continue to struggle and fall out of bed because of poor management teams and those types of things as well. So, could certainly appreciate how you're looking at this, and I think the audience should pay attention to these things as well. There is always the last investor hope in the junior sector that somehow the commodity price will carry everything higher. Well, that's certainly wishful thinking. You have to be able to dig a lot deeper than that and identify the right ones, the timing. There's lots of things that go into this, but very good comments here, and I think some good things for the audience to take away from the conversation. Well, Luke, short of anything else you want to add, why don't we leave it there for this update? For potential investors who are listening in, the company has a market capitalization of about 174 million Canadian dollars. Why should Newcore Gold be considered within the institutional, family office, and retail investors portfolio at this stage?
Well, you're investing alongside a number of very well recognized institutional investors today. I mean, we went through that on earlier. We're 55% institutionally owned today. Those are deep-pocketed, long-term, mining-focused investors who recognize the tremendous upside that there is within the company, as well as obviously management and board. We own 15% of the company. This is money we've invested alongside other shareholders over a number of years. So we are truly aligned from that perspective. I've mentioned it a few times on this call already, but I see us taking this project from a PEA to a PFS and the de-risking that goes along with that, and the tremendous economics that were outlined within that PEA that we're looking to replicate within the PFS, but obviously further de-risked. I see that as a real major catalyst for the company and expecting that to be out in the first half of next year. And then arguably, I would say you get district scale exploration for free. We are continuing to aggressively drill on the program. As I highlighted, we've got 40% of the 35,000 meters of drilling, so call it roughly 15,000 meters of drilling that we will continue to release and complete over the next number of months. So expect lots of news flow between now and year end. As I also mentioned, with that additional warrant proceeds that come in, I would expect that we could see, an expansion of the drill program. So potentially fully funded for an expanded drill program. And then early next year, additional warrant proceeds coming in to aggressively expand again. So fully financed, aligned management team, good institutional support, major catalysts with our PFS, and district scale exploration upside, I would argue, for free. So those would be the main things I would highlight, as well as, again, we've talked about it, but we're in Ghana, which is a tier 1 jurisdiction.
Absolutely, Luke. Yes, we have, and put it on your list, put it top on the list to take a look at from a gold developer junior perspective, this is a very good one to take a look at, and you guys have certainly already demonstrated that. I know some of the audience will look at the stock chart already and think that they missed out. Well, you got to really take a look at the bigger picture, look at the comparables here and where this can go. So I encourage folks to take a hard look, and if you're in it for a developer with all of the upside metrics yet to come, I think you have to take a look. So Luke, appreciate that. And for further information, how can folks contact the company?
Yeah, so on our website, you'll see contact details on there. So feel free to email and reach out through our website. You can also sign up to our mailing distribution list there. We also put a lot of good content out on social media. So we've had lots of good feedback from our analysts, investors, and others. So go to X or to LinkedIn. We've got a YouTube channel where you can see a lot of the YouTube videos that we've put together. So I'd encourage you to follow us on social media as well, and those would be the main channels that I encourage people to reach out. As well as I mentioned, if if you're a client of Canaccord or SCP, feel free to reach out to them as well, given they cover us from a research perspective.
Luke, thanks for the update on the company. Keep up the efforts at the project, and we're looking forward to hearing from you on more updates later on in the year.
Great to catch up, Andrew, and thanks everyone for listening.